So we have breaking news coming out just now on the CPI number, the consumer inflation numbers. And before we do anything else, let's go over to Rick Santelli to take it away. Then we come back, I'm going to show you how the market reactions are to this, as well as financial stocks finally started posting their earnings reports for 2025, and they're blowing away the numbers. So let's get over to Rick Santelli for this exciting news. And when we come back, I'm going to show you the market reactions. Don't go away.
We want to pay very close attention year over year on retail inflation. And here we go. Consumer Price Index for December comes out up 0.4 on the headline, exactly as expected. To find a higher number than 0.4, you're going all the way back to August of 2023 when it was up 0.5%.
Okay. So before he gets into a lot of these, I want you to think of this. The markets were expecting the worst. I was actually expecting the worst yesterday. So we were positioning ourselves for kind of maybe a bad number. So when this number comes in, you have to see the reactions right here. This is how equities are reacting to all this. And you're also going to see bond yields. The 30-year bond yesterday hit 5-something%. We also had the 10-year bond teetering at 4.75 to 4.80. So a lot of the news he's telling you, see the market's reaction to this, because even if it came in, what was expected, the markets are going to rally off of that. But we had some core numbers coming in. Those are when they strip out food and energy. The numbers were much better than expected. So let's get back to Rick.
Strip out the all-important food and energy, up 0.2, 1/10 cooler than we expected, 1/10 cooler than the rear view mirror, up 0.2. How does that comp? We equal July of 24. Find a lower number, you go back to June of 24. Year-over-year numbers, here we go. On the headline, year-over-year, up 2.9. As expected, and I always question how much more important as expected is to the fact that it's 0.2 higher than our last look, which was 2.7. To find a number higher than 2.9, you're going to June of last year. And finally, on the year-over-year core, it's 3.2%. 1/10 lighter than the rearview mirror, 1/10 lighter than expectations. But, 3.2 is a little bit of progress. It equals where we were in August. Now, that equals August. To find a lower number, you're really going in the Wayback Machine. You have to find a 3% number, and that's all the way back in April of 21. Now, many don't look at the indices. I look at the indices. This really says it all, okay? If you look at the CPI index, started in 1913, it now is 315.605. 315.605. That's the second highest number ever. The highest, the record, was October of 24. If you look at this, pretty much every month we make new all-time highs. So it's nice that we pulled back just a smidge. And if we look at the year-over-year, core, going all the way back to 1957, 323.38. That is a new all-time high. What does that tell me? We could look at these numbers based on expectations like we do, but the reality is, even yesterday, if you looked at some of these smaller month-over-month numbers, it just means that the inflation rate is growing more slowly. It isn't going in reverse, and that's what these indices tell us, that virtually anybody out there watching that isn't an economist, they feel the pressure of rising prices, and it's a pressure that very much never seems to ease off. We don't normally see a lot of negative numbers. And speaking of negative numbers, there's one I haven't pointed out yet. Empire was also out. January number, kind of real time, minus 12.6. Minus 12.6 would be the weakest, going back to minus 15 and change in May of last year. So we still see that manufacturing is a bit curtailed. Interest rates moving significantly lower here, significantly lower. Maybe it was the month-over-month core. Maybe it's the fact that we came in as or a little light on expectations, what the market prepared for. But like yesterday, we want to watch the secondary and tertiary responses as we get closer to the opening of equities, because it may be a very short-lived rally pushing yields down. And I do want to point out that we have traded slightly on an intraday basis above 480 in a 10. We touched 5% yesterday briefly in a 30, and the dollar index, well, even though it isn't monetized now on Monday, it was at a 26-month high close. Becky, back to you.
Okay, so good news on the inflation front. He elaborated on a lot of other things. We won't go there right now, but let's really break down the numbers that we've had so far this week. So if you go back to Tuesday, we had this core PPI producer inflation. It was previously at 0.2. It was expected to come in at 0.3. It came in at zero inflation on the core month over month. You had PPI the regular PPI was 0.4 previously, it came in at 0.2. So these numbers are fantastic, saying producer prices are going down. Now, when you go on the consumer side of the inflation numbers, you're seeing that as well. We have core CPI. This is the number, really the headline numbers everybody's watching. Previous reading was 3.3. It came to 3.2. Might not seem like much movement, but any movement down is a plus, like he was saying. Even if it came in on target, a lot of the markets were just expecting the worst. I was as well. Like if you go to my yesterday's videos, I'm like, you got to err on the side of caution, because if this number came in a little bit heftier than it was expected, the markets would have just crashed from here. So that's what we're seeing right through here. More good news that's coming out today is right through here as the Treasury markets are showing some good signs. You also have a lot of corporate earnings starting to come in right now. So we have fourth quarter earnings reports got off to a positive note. You can see right through here, JP Morgan Chase shares rose modestly. You go down to Goldman Sachs, it popped 6%, beating bottom line estimates. Wells Fargo shares jumped 5%. They beat also their estimates, and Citibank gained 6%, beating its estimates. So we have a lot of financial estimates coming in right now, or profits, very, very good. And one of the biggest things that's helping the banks is the inverted yield curve is now back to normal. So that's how banks make money on the spreads between interest rates. And I won't get into that either, but you guys need to understand how the markets work. So right now let's go over to the CME FedWatch tool and see if there's any difference to this, and if the Federal Reserve is going to cut rates possibly at the next meeting. I'm still saying it's a no. They're going to wait for more and more data to come in, because the data we're getting is showing a strong market, jobs market, the consumer's resilient. So does the Fed really have to cut as much as it thought it would? So let's go down through here and see what the probabilities are that there will be a rate cut. There is none. So there's basically a 97% chance, it's right over my head, that the Federal Reserve will keep rates at 4.25 to 4.5. So no changes on that. But like Rick was saying, let's look back and see, okay, he posted this video about a half hour ago. How did they fare since that? Have they given back some things? Because a lot of times what will happen is the markets will pop at the beginning and then it'll kind of peter out through the day. So let's get back to the markets and see how they're doing right now. We go to CNBC to look at the equity markets. You're going to go across the top, and Dow Jones is still up 600 points. S&P is up almost 2% at 98. We have the NASDAQ up 2.2%. So it's a fantastic rally today. The VIX is coming down to 16. That means the markets are calming down. Cryptocurrency took a big positive move on this data today as well, just teetering right below 100,000. But oil's still hitting us, and this is going to be inflationary. So as oil prices go up, the inflation numbers also might go up accordingly. So we're going to keep an eye on oil to see how that's going to impact inflation. But so far today, folks, it is good news all the way around. So if you're looking out there to try to maybe buy that first house, looking to buy your first investment property, maybe even at these rates, you might be looking to refinance. Yeah, refinance. People bought homes last year at 8% rates. Okay, so October of 2023, we had rates at the highest level that we saw in decades and decades. So if that was one of you that bought, please reach out to me. I'd love to help you navigate the home buying process or even the home refinancing process. Again, my name is Dan Frio. I work at ServBank. I'm licensed in all 50 states as well as Puerto Rico. So not only are we one of the country's largest mortgage servicers, we're also a very large mortgage brokerage. So think of this. You can reach out to me, and you have access to all 50 states as well as Puerto Rico. Those are the programs I have. And then we have the programs to offer you here from ServBank. Plus, we're set up with over 30 different lenders to be able to offer you their products and their rates. So my slogan for this year is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Who else can help you with that, as well as having a national presence right here, folks? So how to reach me is just hit the apply now button if you want to do that to get the ball rolling. I highly suggest you don't. Why? Not a lot of mortgage companies are going to say, don't put in your application. We want to know your story, and you guys need to know about us, vet us. Is it a good match? Do we have the programs? Do we have do we just hit it off, and then you'll find your competence is, once you speak with us, is this someone you want to deal with? So please vet us by scheduling an appointment with us, or you can scroll down to the bottom right through here, and you can find our 800 number as well as my email address. So if you're wanting to post a question for me, please don't post it down below. Please send me an email at dan@therateupdate.com. I promise you I will answer. And if you provide your phone number, probably even most likely give you a call as well. So if you want to reach us online or by phone, just give us a call at 844-775-5626. Thanks so much for watching, guys. God bless. Have a fantastic afternoon. I'll be back at the closing bell to let you guys know how all this mess ends for the day. Thanks for watching. Take care. See you later. Bye-bye.